It has been one wild week for Robinhood investors, that's for sure. After a lackluster market debut last week, shares of the zero commission trading platform shot up more than 140% this week, then crashed more than 40% from its peak into yesterday's close on news that a bunch of investors were looking to unload the stock ahead of the company's earnings report. Robinhood came out this morning to clarify that stock sale. We see the stock up now nearly 11%. Joining us to make sense of it all is Brianne Lynch, Head of Business Development and Partnerships at EquityZen. Brianne, good to see you here. So, is this the kind of volatility investors in Robinhood should be ready for? Is it destined to be the ultimate meme stock?
Hi, and great to be here. We saw in the pre-IPO market that there was a ton of interest from retail accredited investors for Robinhood. So we've been eagerly watching to see how this would trade. And one thing we did expect was this volatility. And considering that Robinhood was likely one of the biggest beneficiaries of this meme stock frenzy over the past year, it almost seems fitting that their public market debut is seeing that similar type of volatility.
Now, I do want to ask, because there's a lot of meme traders that were on Robinhood as we saw wild swings in a lot of other stocks. We just talked to CarParts.com CEO who mentioned that his stock actually experienced a lot of volatility because it was one of those stocks that had been so heavily shorted. Do you think that Robinhood itself could become victim of some of that meme stock Reddit trading that we are seeing going on the platform?
Absolutely. And we're already seeing this. If you look at Reddit and Twitter and other social media platforms, this is one of the stocks that is being talked about more than any other. We saw on Wednesday that it was the fourth most traded stock in the US by retail investors, over 460 million shares traded hands. So this is an actively traded stock. And given the retail brand they have and the fact that they offered up to a third of their shares to Robinhood users, retail investors in their IPO, they really set themselves up for some of this volatility. We haven't seen that much access to an IPO since Facebook's IPO back in 2012. And these typically are not buy and hold institutional investors who help steady a stock at their IPO.
Do you see, though, in the not too distant future, the stock is going to find its sweet spot and sort of settle someplace? And where might that place be, Brianne?
I would say it's anyone's guess. Is this stock going to be at 30 at the end of the year? Is it going to be at 80? We don't know. And I don't think any investor who is faint of heart should be investing at this point. It's going to be a wild ride. It's going to be a bumpy ride. And there are very clear bull and bear stories here. So there's plenty of reasons why this could be a great buy opportunity. And there's plenty of reasons why investors might pause as well. But at the end of the day, if you're not interested in a volatile stock story, this is not the stock for you.
How do you think that regulation might impact the stock, but also just the company coming down ahead? Payments for order flow was one of the huge points of criticism that so many folks really pointed to when they were giving that bear case, at least ahead of the IPO. And I know that Robinhood already has plans to really lobby Congress and others about the potential regulation, particularly on that payments for order flow. But what are you imagining is right now is some of the perhaps the regulatory headwinds that could face Robinhood that investors should really be paying attention to?
There's certainly a lot of regulatory hair on this stock and on this story more broadly. We saw in their S1 that 81% of their revenue in Q1 came from payment for order flow. So if the SEC were to curb their ability to be compensated this way, this would have a huge impact on their business, not just from a regulatory perspective, but from a revenue perspective. As they filed their S1, we saw that FINRA hit them with a $70 million fine, the largest of its kind. And day before their IPO, we saw that FINRA was looking into whether or not their CEO and other key employees should have been FINRA registered reps. And these are just a few examples of many of the items that surround Robinhood and create a lot of regulatory risks. I think another thing worth noting too is that a majority of their trading revenue, over 50%, comes from trading of options and cryptocurrency. So if there are regulations put in place, some consumer protection acts that prevent early investors or unexperienced investors from investing so freely in these types of products, that's going to have a huge impact on their revenue as well. So certainly enough from a regulatory perspective to support a bear case.
All right, Brianne Lynch, Head of Business Development and Partnerships there at EquityZen. Thanks for talking Robinhood with us today.